Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, it's a brand new week, but the cues coming out of global markets are fairly bleak, given the fact that the GIFT Nifty is hinting at more weakness after last week's drubbing that shaved off nearly 2.5% from the Nifty as well as the Sensex. But of course, we'll be talking about the trade setup and all the stocks in focus today, including the likes of Bajaj Finance and Delta Corp. And we'll also be, addressing all your queries, stock-related queries with our technical expert on the show. So if you have any queries, send them in to us on our YouTube feed and we'll try and take them up. But before we go any further, let's take a look at the top headlines at this hour. US futures edge higher this morning, but the S&P 500 and the Nasdaq are on track for their worst month since December 2022. In fact, a hawkish Fed, rising yields and surging crude prices hurt equities. Nasdaq, in fact, is down nearly 6% so far in September. Asian markets open mixed. Investors eye key inflation data from Australia, Japan and Singapore. The GIFT Nifty is hinting at more pain, as I mentioned, for the Indian market after a near 3% cut last week. Crude breaks a 3-week gaining streak. Brent prices consolidate around $93 a barrel as markets weigh supply cuts against expectations of lower demand due to higher for longer interest rates. Among stocks in news today, hefty GST demand notices worth nearly 16,800 crore rupees could pressure shares of Delta Corp today. In fact, the company will take the legal route to challenge the same. SBI, meanwhile, raises 10,000 crore rupees via infrastructure bonds at a coupon rate of 7.49%, while Bajaj Finance's board will meet on the 5th of October to consider a fundraise. And JSW Infra's 2,800 crore rupee IPO kicks off today. The company has fixed the IPO price band at rupees 113 to 119 per equity share. Meanwhile, Updater's 640 crore rupee issue also opens for subscription today. Well, without any delay, let's bring on board our technical expert for today then. Rajesh of Axis Securities joining in this morning. Good morning, Rajesh. As usual, great to have you on the show. But looking at the market texture and the kind of sell-off we saw last week, in fact, Friday had some good news in the form of, Indian bonds being included in the JPM bond index. But, that wasn't really enough to revive sentiment, and we ended the day as well as the week on a down note. So 4 days of selling. Do you think the texture of the market has now shifted to sell on rally?
Good morning, Nandita. Yeah, so structure is slightly turned on the bearish side on the near-term setup. Both the indices, Nifty and Bank Nifty, both have slipped below to 20-day moving average. Even on the weekly basis, we have seen a bearish kind of candlestick formation on the weekly chart, which also adding up some more, weakness we are going to witness in the coming trading session. Even on the derivative data front, most of the call writers are now aggressive at 19,700, 19,800 strikes. That clearly shows that, the supply pressure is likely to be there for any kind of minor pullback if we witness in the market. On the other end, 19,500 is the key important support area for the downside, as the still major put concentration for this monthly expiry is there at 19,500 strike. So sell on rise is the strategy. 19,900 is the key level until Nifty not crosses those level. Whatever minor pullback if we get in market should be used as a selling opportunity for trading point of view. On the downside, 19,500 is the target in the continuation of this downtrend. For Bank Nifty also, we have now we are slipped below to 45,000 level. Looking at the data setup of 44,400 is the important and immediate support area for today's trading session. If he breaks those levels, then maybe furthermore selling pressure we can see in the market, and furthermore long unwinding trade setup will initiate. And then Bank Nifty may also go down towards 44,200, 44,100 levels in the continuation of this downtrend. Again, in the Bank Nifty also, sell on rise is the strategy until the Bank Nifty not crosses and close above 45,000 level.
All right, those are the levels to watch out for on the Nifty and Bank Nifty. Hold that thought, Rajesh. We'll come back and talk specific stocks with you. But let me also bring on board our next guest for today. Rahul Malani of Sharekhan by BNP is joining in this morning to talk about, where the risk reward is more favorable now, private banks or PSU banks. Well, good morning, Rahul. Great to have you on the show. As I was talking about the private banking pack as well as the PSU banking pack, if you look at the PSU bank index, I think over the last 6 months or thereabouts, it has surged over 46%. That has clearly outperformed the Nifty private bank index, which has gained somewhere around 10 to 13% or thereabouts. So do you think now the risk reward is more favorable in terms of PSU banks going forward?
So first of all, good morning. We have seen top tier PSU banks outperforming already on the strong tailwinds, which is going through the sector. Now we should see the lower. We believe that now the time is for the lower tier PSU banks, which have not shown a substantial reduction in the credit cost during the FY22 and 23. So basically, in FY24 and 25, we should see a strong reduction in the credit cost below 1% for some of the banks like Bank of India and Punjab National Bank. For exception, there is an exception for Punjab National Bank. As the net NPA numbers and the restructured book is around more than around 3%. So overall, the stress will be back-ended. But in FY25, you should see a substantial reduction in the credit cost below 1%. So the theme is that in FY24 and 25, basically this lower tier PSU banks would report core ROAs closer to 1%, which is leading to the re-rating in the stocks.
But Rahul, most of these banks have run up quite a bit, over the last 5 to 6 months. Do you think there is room for more upside, and valuations, how are they stacking up now? Also, let's also not forget that, we've had JPMorgan including the Indian bonds in its EM bond index. Of course, that would boost the bond portfolio of some of these PSU banks, right? So, in light of that, which of the banks are looking particularly interesting at this juncture?
So basically, we are bullish on low tier PSU banks. As you alluded, valuations are still comfortable and provides any corrections in the lower tier PSU banks provides a good opportunity to buy from a 1 to 2 years perspective, because there is a strong earnings outlook for them. So basically, we are bullish on our topics in the lower tier PSU banks remains Bank of India and Punjab National Bank.
All right, those are the banks looking attractive from the PSU banking pack. But let me also ask you about the private banking pack. Of course, we've seen what has happened with HDFC Bank. Shares have come under pressure, as the merger overhang continues, and that is likely to continue for the next few quarters, a couple of quarters going forward. But would you say that the kind of benefits of the merger that accrues to HDFC Bank, this is the right time to actually look at perhaps accumulating on dips?
So basically, in private banks, major two private if you look at HDFC Bank, there is a important liability side transition which is going to happen. So we believe that the stock is likely to consolidate in next 6 to 12 months. In Kotak Bank, if you look at the management transition is pending as and when it will come out in coming days. So the thing is that there could be a substantial re-rating after in Kotak. And in terms of currently, the two private banks look solid for investment thesis, look solid for them is ICICI Bank and Axis Bank, which we are bullish on.
All right, Rahul, we'll leave it at that. We are running short of time, but we'll touch base with you sometime soon and discuss banking stocks and financial stocks in detail. Thanks a lot for joining in this morning. Well, on that note, let me go back to Rajesh and talk about specific stocks. Delta Corp, Rajesh, stock of the day, given the fact that it has got a GST demand notice of somewhere close to 17,000 crore rupees, wherein 11,000 is, is raised directly against the company, but the balance, 5,600 crores is relating to its 3 subsidiaries. Now, when the GST rate, in fact, was hiked to 28%, we obviously saw some of these gaming companies come under a fair bit of pressure. In fact, Delta Corp, I think over the last 1 or 3 months has given negative returns, but this tax demand of nearly 17,000 crore rupees could deal a serious blow to the share prices as well and the company's financials. But particularly in today's session, what are the support levels one should be working with when it comes to Delta Corp?
So overall structure for Delta Corp is on the bearish side. Stock is now forming a head and shoulder kind of formation, and looking at the near term as well as the short term, long term setup, we believe that if stocks breaks below 170 mark in today's session, the next target on the downside we can see towards 155, even 150 zone. That is the immediate target we can see on the downside. It's a big setback for the company, and overall structure is on the bearish side only. So 150 is the immediate target, and even if it's not hold 150 level, then this stock can go further down towards 135 level also. On the other end, 200 is likely to act as a major supply zone for any kind of pullback action if we see in the near term basis.
All right, that's the view on Delta Corp then. But let me quickly get on with the brokerage call of the day. Of course, Bajaj Finance, board will be meeting on the 5th of October to consider fundraise either via preference share issue or a QIP. And because of that, of course, the stock will be in focus today. And, we have a couple of brokerage views coming in on the equity raise as well going forward. In fact, merchant bankers have also been fixed for the fundraise. That was an exclusive broken by my colleague Ashwin Mohan. But if you look at what CLSA has to say about the stock, it has a buy call. Target price has been raised to 9,500 rupees per share. In fact, management believes that the capital raise will help fuel long-term growth for the company. 10 to 13% book value per share accretion from 10,000 crore rupee equity raise is will still result in a 20% plus return on equity. That's what CLSA is saying. And Jefferies, on the other hand, also has a buy call target price of 8,830 per share. Looking at Bajaj Finance, how much of an upside do you see on this stock going forward?
So, Nandita, immediate upside and the supply zone for the stock on the near-term, short-term basis, that is 7750, which is the important supply zone on the higher side. If at all stock crosses above 7750 level, then this rally can extend towards 8,000, 8,200 in the coming week and coming month. So as of now, stock is in consolidation mode. On the downside, the major support area on the downside is 7420. If stock manages to hold this level, then possibly stock is poised to give breakout above 7520. Once this breakout happens, then next target is 7750 in the short period of time.
All right, that's the view then. But let me also take up some viewer queries as we're running a little short on time today. But the first one comes in from Dave, wants to know your thoughts on Berger Paints. Now, this stock was up and about, on Friday, 7% gains in a weak market. And even on a 1 month basis, it has risen somewhere around 15% or thereabouts. At a time when crude prices are rising, of course, that's a major raw material for some of these paint companies. So that is a risk going forward. But Berger Paints particularly has been done fairly well. If somebody holds this stock, would you advise them to book profits or hold on to it for higher gains?
So in the last week, we have seen a smart rally in the stock, and now stock has managed to give breakout of its April 2022 swing high. Looking at the breakout on the major supply zone, we expect that if stocks continues to hold above 650 level, then further more upside we can see in the near term basis. Even the peer company Asian Paint also given a breakout. That is also in my buy list. So looking at the sectorial momentum, yes, we do believe that Bajaj Pen can scale up further higher towards 700 to 720 in a positional basis. So hold your position with stop loss of 650.
All right, hold is the call on Berger Paints. But let me take up some queries on the defense pack. We have a query coming in from Yogesh Kumar on Hindustan Aeronautics, and we also have a query on our feed from Vivek Kurub, who wants to know your thoughts on BEL. He's bought at 145 and he wants to know the target for the next 1 week. So these two stocks, HAL and BEL, what's the call given the fact that, they have the rally that we saw over the last few months has cooled off a bit just now?
Yeah, definitely. So overall structure for both the stocks are for the long-term basis is on the bullish side. But yes, in the near term, some profit taking is happening. Both the stock are now trading below to 20-day moving average. HAL has given a breakdown to its upsloping trend line on the daily chart. So for HAL, the major supply zone as of now for trading perspective is at 39.50 zone. Until the stock not crosses those levels, some more profit taking we can see in the near term. And on the downside, 3800, 3760 are the important support area. So those who wants to buy the stock in decline, they can wait for some more corrective move towards 3760 to buy an equivalent stock on the downside. For BL also, stock is now trading almost near to its important multiple support zone area of 133. If it breaks those level, then possibly stock may show further more profit taking towards 128, 125 zone, which is again important support area on the downside. So buy on dip should be strategy for both the stocks, as overall structure for long-term basis is on the bullish side.
All right. Overall structure remains bullish on the longs on the long-term basis rather. But let's take up a query on ONGC. This one is coming in from Vinny. Wants to know your thoughts on this stock. Crude prices have, of course, as I mentioned, heading northwards towards $100 per barrel. But ONGC last week didn't really do all that well. It is near about its 52-week highs, just a few 5 or 6 odd rupees away. But would you say that upstream companies are looking more attractive vis-a-vis OMCs at the juncture?
So ONGC is consolidating after a decent rally, and now stock is consolidating very narrow price range. 180 to 190 is the range where stock is consolidating since last couple of weeks. So looking at the overall structure, one can remain on the bullish side of trade. 180 should be your stop loss. If stock not breaks below 180, you can hold your position. Once stock crosses above 190, 92, I think ONGC can continue its uptrend, and then possibly next target for stock towards 210 can be there on the positional basis.
All right, that's the view on ONGC. Hope that answers your query. But the next one is coming in from Nitin Limay wants to know your thoughts on HFCL. Now, this, if you look at the 1 month chart, it has been fairly volatile. At 72 odd levels, do you expect it to, head northwards from here, or would you say that, look at stop losses of somewhere around 65 or thereabouts?
So after really, yes, since last 2 weeks, we are seeing some profit taking is happening in the stock. The stock is almost trading near to its critical support area of 70. If it breaks below 70, then possibly stock can go down towards 66, even 64 level also. So keep your stop loss at 70 rupees. If you have bought for a trading perspective, 70 should be your stop loss. On the other hand, 76, 78 are the major supply zone. Until the stock not crosses above 78, it may remain under pressure, and possibly once it breaks below 70, then it may slide towards 64 level also.
All right, that's the view on HFCL. But we have a query coming in on Tata Motors from Vera Muthu, and wants to know your thoughts. Of course, after clocking in 50% gains, on a 6-month basis, the stock has kind of cooled off a bit. But from here, what are the kind of targets you'll be watching out for over the next 2 to 3 months?
So after really now stock is showing some profit taking on the daily chart. Stock has given a breakdown of its upsloping channel, and looking at the breakdown on the downside, we expect that if stocks trades below 635, 640 level, then possibly some more pressure we can see in the near term basis. On the downsides, 590, 580 are the important support area to buy and accumulate the stock on the decline. Overall structure is on the bullish side for long-term basis. So one should use this decline as a buying opportunity. On the other hand, 630, 640 are the major supply zone for the stock on the near-term basis. Once the stock crosses above 640 level on the weekly closing basis, then it may resume its uptrend, and then we can see a target of 700 also on the positional basis. But looking at the near-term setup, some pressure can be there in the stock prices. So one should use this decline as a buying opportunity.
All right, use declines as a buying opportunity for Tata Motors. Last query for the day, really. This one is coming in from John on Granules India. Now, after being under pressure for the last week, most of last week, Friday was a comeback session for this stock. It was up somewhere around 4% or thereabouts. How would you advise investors to play this stock going forward?
A very strong setup. Almost it's a 5th consecutive week where we are seeing stock is forming higher high-low formation, which clearly indicates that there is a sustained buying action is happening in the stock. The stock is almost near to its near-term breakout level. If a stock trades above 338 level, then possibly this rally can extend towards 355 to 360. Hold your position as the structure is looking on the bullish side. 330 is the immediate trading target for the stock. We expect that once the stock crosses over 338, this rally can extend towards 355.
All right, that's the view then on Granules India. This wraps up our query segment for today, Rajesh. But before I let you go, what are you recommending for our viewers this morning?
So it's a mix of buy and sell. REC is looking promising on the buying side. Stock is showing a good strength in the previous session. Also, we have seen a strong buying action. Looking at the overall structure, we expect that REC Limited can continue its uptrend, and we are projecting target of 283. Keep your stop loss at 264. The stock which we expect to fall further, that is Siemens. Stock has given a breakdown of its 50-day as well as 100-day moving average in the previous session. Looking at the lower top, lower bottom formation on the daily chart, we expect that Siemens can continue furthermore pressure, and 3640, 3620 is the immediate target on the downside. So one can remain on the short side of trade with stop loss of 3735. The third stock again on the buying side, as I have already mentioned, that Asian Paint is looking strong. In the previous session, stock managed to give breakout of its falling trend line on the daily chart. Stock is now sustaining above 100-day moving average. Looking at the long built up in the previous session, we expect that Asian Paint can scale up to the level of 3340, 3355. So one can buy Asian Paint with stop loss of 3255.
All right, 2 buy calls, one on REC and the other one on Asian Paints, and a sell call on Siemens. With that, Rajesh, thanks a lot for joining in this morning and sharing your thoughts with us. Look forward to chatting up with you again sometime soon. Well, with that, we've come to the end of this edition of Morning Trade. But, just to remind our viewers, 2 IPOs opening up for subscription today, JSW Infra as well as Updata. So, log on to moneycontrol.com and, you can read articles on what experts have to say whether or not these are, you should be subscribing to them or not. But with that, we are completely timed out on this edition of Morning Trade. So, from me and the entire team, thanks a lot for tuning in. But stay tuned because coming up next is Opening Bell.